Hey guys, live now. Sorry I'm a few minutes late. I had to take care of something right quick. Let me put my AirPod in here, see if we can get a little better audio for you. So I'm not live on TikTok, guys. I'm hoping people aren't waiting for that. I have some things I have to do. And so I'm just gonna kind of still do the huddle, just because this is a daily thing. I know some of y'all depend on it. We're going to talk about the ranges, what we see. I'm going to talk about my market insight. So let's go down. Let's talk a little bit about the insight and kind of what we see and what happened, right? All right. Actually, before I get into that, let's go ahead and talk a little bit about what happened on Friday and yesterday. So the main thing is, guys, what we want to look at is from a technical standpoint. If you go to the 15-minute, you can see we had a fall that was captured by the 200, kind of created that double bottom look, right, with a retest. So the double bottom broke us back above the 21. We retested the 21, created that higher high. We did get a bearish confirmation here, but it held above this 21, right? So that continues to cause bullish sentiment in the market from just a basic TA standard, right? And if you go to the 1 hour, this is the key area. This is huge right here, guys, because although we do have some bearish divergence that's starting to appear, that divergence may just pull us back into a retest somewhere around 430.5 or 429.5. If the candles stay above this range, I mean, we got upside to go. The key resistance area, this is one of the most important things. I cleared all my lines because I wanted to show you guys some of these levels. Is look at the high that we created right here, 433.45 on the extended hours. This is the prior high I want you guys to mark right there. This is going to be an absolutely critical high, which is about 434.09. If you all looked at the levels that we set up here, pretty close to where that first level is. So it's going to be the one to watch today, guys, because if we break above this, I mean, we're going to see some crazy volume. And if we retest it as support, we'll see even crazier, because now we've entered the zone of trying to reclaim this side, right? So it could get pretty nasty if you're in puts. If we stay below this level here, you can see, we had some pretty crazy rejections along the way. So the main thing that I want to watch here is if you go to the 15-minute today, from a technical standpoint, is we do have a shoulder, head, and a possible shoulder forming. So if we do get this head and shoulder, we may get that break down to that level we were talking about, right? Like maybe 429, 429.50, somewhere in there. And then look for a possible bounce from there. So, if this volume that's picking up right now, if the market opens and it continues to drive it north, that head and shoulders is all but invalidated. So from there, we'd want to just take just this peak. You can see there was some resistance within here, so we can take something like that. If it does come up and break it, it could just be, that this could end up a shoulder, right? And that we could see some upside up here to create a head and then back down like that, and then just ranging. So after a run up like this, I mean, this is a pretty significant run up, guys. I mean, it was only like, Friday, last week we were sitting at 420, right? So, I mean, we've had a pretty significant run up. This could arguably be called the gap fill for this one. We do still need a little bit of a gap fill somewhat in here for this one that I would like to see. From a harmonic standpoint, we had a little bit of bearish harmonics pop up. We did get that 5-0 and that double bottom on that push. And then also the harmonics did call that long from there, but we did not get our short yet. The main thing that's showing a little bit of sign of potential pullback is that bearish divergence I would watch. If you go to the 1 hour, it's also there too. A little less significant, but it's there. But this is the big key of today is what we want to watch is the SMA and the EMA. So Be really careful on the puts. If you're going to take the puts, try to get them up in the higher range. That's why, if you noticed on our put levels that I set, they're up in the higher range. So, and then the continuation put is basically to capture some movement within here. So it's kind of what I was looking for. If you go to the gap fill and we study this one, what I look at on this one, as you guys know, is on the 1 hour, we're kind of in that middle range. So we could have some definite upside to before we hit that band. Not really calling any kind of gap fill yet there. The 15 minute, again, we're in the middle of the band. Not really calling a gap fill quite yet there either. And then on the 5 minute, we actually had interesting enough, a bullish gap fill that it had called. If you look at it right here, I was looking at it in pre-market. So it actually called that bullish gap fill spot on. So, because you can obviously see we had our push north. So whether this push north holds will be interesting because, again, this shoulder is key. So like you can almost mark this previous high and look at, we're starting to possibly reject off of this also previous high here. So this is another key level you can mark, which is 432.88. If we break above this and start holding support, it's likely to invalidate that. But if we stay below this, then we might just be creating this shoulder, guys. If you take the extended hours out and you just go to the regular hours, it actually has a little bit of a rounded top possible handle here that could have been created. But you can see, obviously, we're up higher here. So, from here, if you take the pre-market and you were to just push that up, could be a possible double top. But we do have some gap fills that do need to be filled. The 5 minute, we are still red if you look at the regular hours. 15 minutes, the divergence is still there. 1 hour divergence is not there. So, again, I look mostly at the extended hours because that's going to give you the true picture of each movement. So, but that's the key ranges we want to watch today, guys. I want to caution you because it's not an easy day or an easy market to trade today because of the fact that we are very bullish, but we are also very, very overbought with these gap fills, right? And so now if you go into the 15 minute, for the most part, we got very overbought and we started to sell off, but again, the price action's holding. If you go to the 1 hour, we're a little bit on the overbought, but not quite overbought technically. And if you go to the daily, we actually have our first possible green print. So that's also what's causing some temporary bullishness. So the key thing a lot of people were watching on the news, which so far is holding strong, is this weekly. We did have a weekly gap fill that did pop up all the way to 442.91. That could happen. We are still red on the weekly. So, if you think about this on the weekly, right, you could have this as a potential double top break, and we could just be retesting this prior neckline, right, which is around 433.22 or so. So, let's actually check what's the low. Yeah, 433.01. So that could be something that we want to watch, because if we stay below that 433.01, we could see this as a double top retest, right, and then see another pullback. So a lot of craziness in the market going on, right? We did flip purple still here, but we are at the bottom of the band. So keep in mind on the weekly, to move up to here is 443. That's a long way, but it's really not that much because we're on the weekly. So and that could take months to play out. So you wanna just keep that in mind when you're doing TA on the higher time frames. So that's some kind of key levels from a technical standpoint that I'll be watching today. Don't lose focus of the fact that most tech stocks were down yesterday. I was talking to CK, and his belief is, obviously with the Israel stuff going on and war possible coming, there's a lot of other tech companies out there that are going to have their stocks soar because they're getting ready to make a lot of weaponry. So this is trading, guys. So this is how we play it. We just take each day at a time and continue to pivot and ride with the waves. So Bitcoin, I'm not going to cover too much on. It doesn't seem like a lot of people are trading it. But we did have a breakdown. We have a short here playing through. I have support somewhere around 27,207. If that breaks, we're going down. If that holds, we're going up. Keep that one short and sweet. Let's talk about the dollar. Interesting enough, this is what I'm kind of watching is, so the dollar found support at a higher level than here, right? So we could see a potential push north on the dollar, which would make the head and shoulder play out on the SPY. Very possible, but it may be short-lived because if you think about that, right, now you've created a potential head and shoulder on the dollar, right, which then could do that and then drop down, which puts us at like Wednesday the 18th or something like that, right? So we want to keep that in mind because that coincides with what we're seeing as a possible short-term pullback and a reversal back north, right? If that dollar does break down like that. For me to believe that the dollar is not going to break back down, I would need to see this support held strongly. I would need to see this trend line broken right here. You can see this was a trend line once upon a time right here that it has broken. I would want to see this reclaimed for sure and kind of squeezed, right? And so if we reclaim this and we start to squeeze like this as support and it comes up, it's likely going to break. I would want to see it break 106.85. If this does that and it continues up, then we're likely for some more downside in the market. So that's kind of what to watch from the dollar. From a VIX standpoint, we've just been bleeding. We knew that we were overbought on the VIX, and there was a lot of bearishness starting to show. This trend line here, you know, where we place it is arguable, right? You could use this wick. I had chosen to use this other low, which if you line it up, it misses this wick slightly, but it's holding pretty close to where we are now, right? Where it's trying to hold. If you look at the 1 hour on the VIX, we are trying to hold that 200 EMA. Here you have the 21 SMA trying to close in. It's a key level. If it can hold that, right, then we're going to go back up. If it can't, then it's going to fall pretty nicely. So 5 minute, we've just been super bearish on that. So the VIX. So also looking at the VIX, you know, you have some key support levels here. This will be a big difference if it decides to push. I'd say right around there, around 17.53, because you have a touch, you have a touch, you have a touch, reclaim. So even if we break this structure here, we could find some support and pump back up, right? So that would be will be some key levels that I'm going to watch on that today. So let's kind of dissect the insight. We do have our key levels. I'm not going to talk too much about those. So I wanted to take a minute, since I'm not on TikTok on this one, just for those that want to watch this video, and explain how to read this, because it's a lot of data, a lot of valuable data, and I get sometimes it can be confusing. So the opener, obviously, this is our disclaimer. You know, trust what you see and what you've learned, right? The market can change. It happens. You know, we can predict all the technical analysis in the world, but if news doesn't support it, right, it's going to shift. So the next level here, we talk about the mood, right? This is where I'm going to talk about, you know, the fact that the overall market has shifted to bullish sentiment now. It means traders are taking more calls. As we've seen in the past, what happened 2 days ago? Remember, we were talking about in the room, I said, it's interesting because we have like no bullish days, meaning everything is bearish days. Now, some people may say that, well, you know, you guys got that wrong with the data. This is not, just to be clear for those watching this is not our calculation. This is data of the current market, right? What this means is the overall market sentiment is now bullish, meaning you take all of the puts and all of the calls out there in the entire market right now. Are there more people in puts or are there more people in calls? If there's more people in calls, it could be that they believe that we're going to go higher. But again, remember, this is mostly the retail side. So what happens when things become too bullish, right? The hedge funds and the market makers, they'll shift you bearish. If you become too bearish, they will shift you bullish, right? It's always going to oscillate, so it doesn't mean we can't go a little up or a little down right before that happens. But that is what you want to use this data for mostly, is not necessarily say, okay, bullish days, I'm only taking calls, right? You may get that shift, like we had all bearish days and we got that shift, right? So we want to be able to understand how to read that. These levels are black and white, very easy. You got first level all the way to third level support and resistance. And then, we add this crucial number, which is, it's just kind of that key middle range, right? So if you stay above it, you likely want to take some calls. Just wait for the retracements to support it. If we break below it, you might be clear to take your puts, right? So fairly simple on that. Max pain, as we talked about, this is where can the hedge funds and the market makers cause the most pain in the market, meaning the most loss among all traders in puts and in calls, broken down by contract days. So when you see this today, that means that today it would hurt the most on 0 days if we went down to 426. Doesn't mean that we're going to 426, because remember, the market makers, they're okay at times letting the bulls win or letting the bears win. As long as they have enough liquidity balance, it's okay, right? What you want to look for when you're looking at max pain targets is, where's the shift? Notice how we are at 426, 427, pretty balanced right here, right? And then it goes down just a little bit. So this might give you some sentiment that if the news supports it tomorrow and Thursday, that we might head down a little bit in a decently quick way. However, notice the shift on the max pain. Any contracts that are 8 days or above are actually a pretty high difference at 429. So it's important to know this, because most of their higher liquidity contracts are going to be higher contracts. And so the market makers may say, okay, all of these ones right here, we could inflict some massive pain to if we dropped it. But obviously they're not going to always drop it from, 432 or whatever we're at all the way to 423 and then back to 429, right? It doesn't just follow it. They may just let the bulls win, hold the price up, drop it back down to 429, right, and just hold a range between maybe 429 and 431 or 432 or 428 and 432. They may find that range and then just let the bulls win on these days, and then we just shift right in the range. So this is, you got to kind of think about it from the psychology of things, right? And then I typically am just going to put a little trading outlook. The market sentiment's bullish. We had the golden cross on the 1 hour. It's essential to note that we could have some bearish days, right? There's always a retest, always a gap fill. No matter what, it always gap fills. It's just trying to identify where that happens. Calls are not off the table, but just be patient for pullbacks. Don't chase stuff. And then just my little disclaimer, right? And then we have the settings in here that we set up. So I want to talk a little bit about the settings briefly, and then this will kind of be the huddle. These settings are more passive for a reason, because I want people to be able to set these and go to work. It doesn't mean that I may not make adjustments. I may not always even announce all of my adjustments, because if for those that are trading in the live trading room, you're with me, right? We can analyze it. We can add something. We can remove something. We can take something away. We can talk about stops or whatever happens. And I know that's hard to do when you're at work. So I don't want people constantly having to think that they have to stare at their phone while they're at work. So if I put out an alert saying, "Hey, I'm changing this," just because if I ever change, if I ever change one of these and I feel like this is not no longer a viable or good range, then I will absolutely put out the alert. But just because I change something to a better possibility or option doesn't mean, because of what I see, doesn't mean that this is still not a good option. So don't freak out about that if you see me changing. But there is an advantage to trading live with us in the room. Not only we teach people, but we talk about settings. We look for other opportunities. You can be more aggressive, less aggressive. It also depends if you have a $20,000 account and you're trading 5 contracts at a time, you might be able to be a little more aggressive. You may be able to adjust those ranges a little bit, or take a instead of the 4 up and down pivots, you can throw in 6 or 7, 8 different ranges or pivots. So just be creative with it. Don't just think it you have to cookie cutter it. So this is not these ranges I do set on my account, but it's not the only ones I set on my account. I do set other ones, but you have to remember what I put in the whole community. I have to balance the risk ratio of what I feel is the safest possible option with pulling out some profit out of it, because I don't want to be too aggressive, right, and just keep getting caught and then having somebody at work having to figure out what to do with it. So but that's pretty much what I have, guys, for that. I'm gonna open up the room in about 4 minutes. I hope that helps you guys out. That's why I didn't really go live on TikTok, because I wanted to do more in depth on this, and this is not really for TikTok people. So, but I have had some questions on the insights. I hope that you guys find some value in this insights. I'm going to continue to try to find things that will help you. But just stick to the charts, guys. I mean, these crazy pushes north and these crazy pushes south, they're going to happen. It's not always normal, right? I mean, the best thing for us to do in trading is to get these kind of movements, right? But it's interesting, because if you, I'll leave you guys with this, but if you play with this replay and I were to take it back here, right, you're going to tell me, hey, like, I think we're going to the moon, because we're breaking some key levels, like we're pushing up, like, oh man, like we're so bullish, you got an inverse head and shoulder, it's a reversal, this is going to shatter it. That's what everybody was saying on the news, on social medias, right? And then, you play it out, and we obviously know what happens, right? It broke down, it created a head and shoulders instead, and bam, down we go, right back. I mean, guys, we went from 432 back down to 420 in a matter of Friday to Tuesday, 3 days. So for those that think that we can't move $10 in just a couple days, or heck, even a day, right? It's very possible. And so you just got to stick to your charts. Don't get overly bullish. Don't get overly bearish. That's something that is a very difficult thing to do. As a trader, it's something that I'm even still working on, right? Is to try not to be too bullish or too bearish on what we see, right? And so now we do have some things that we got to when in doubt, zoom out, right? So we got also you have a little bit of a rounded bottom forming. Now, to complete this rounded bottom, it would be nice to get a little bit of a pullback, down into this 425 range, something like that, right? So you can kind of create that clean bottom like that. And that could be what we are waiting for. But we may see a push up today as high as 430, 410 before we experience that. So we'll find out in about 15 minutes. So I'll see you guys soon. We'll trade for about an hour, and then we'll go about our day.